And well, for more on this, we are now being joined by Mithali Nikore. She is an economist joining us from Kolkata in India. Welcome to World Business Watch, Mithali.
Thank you. Good morning.
Good morning. Now, many on Wall Street bet that investment flows into India and Japan will perhaps increase at the cost of Chinese asset under Trump 2.0. What is your take for 2025?
So first of all, thank you so much for having me on the show this morning. And, this is a very interesting question which has been raised. We have to start now thinking about how the real economy is truly impacting the financial economy and financial flows, because this is a classic case of, the real economic changes, such as, a change in incentives like tariffs, impacting the decisions of different investors and saying which is the market that's actually going to give me the safest return. See, in this case, nobody is doubting China's growth story. Yes, everyone knows that there will be a certain amount of slowdown in the Chinese growth. China has had many decades, almost 2 decades of continuous growth. Definitely it will taper down. But the fundamentals of the Chinese economy are also strong. Yet, because of this tariff story, there's suddenly a question over whether Chinese made products will have similar access to the US consumer as an Indian made product or a Japanese made product, or even for that matter, products made in Taiwan. And Hong Kong, of course, hangs in the balance. So on balance, I would say that for Asian markets, besides China, the outlook is much more positive only because of the tone in which the tariffs have sort of sought to target the Chinese economy.
Right now, the Indian economy is broadly expected to slow this year. Will that perhaps have an impact on the narrative of India gaining on China +1 strategy?
So I believe that one of the growth drivers for India is going to be the manufacturing sector in 2025. I mean, we've seen that post-COVID, the government of India has been very bullish on the entire manufacturing story, bringing in a very bold reforms in the form of the production-linked incentive schemes. Because at the end of the day, this was not a widespread measure. It was not, in fact, taken very positively by Western markets and Western, trade economists, for example, who looked at the PLI scheme almost like as a way of saying, you're just trying to attract investors by giving some SOPs, and this is not going to be sustainable. But 3 years on, the production linked incentive scheme has brought in a lot of investments, and I do believe that even if there is a slowdown on the services side, India will make up for it with the manufacturing investments coming in.
I also want to seek your assessment as to what is your outlook for the Asian markets in 2025, especially with Trump in the White House in just maybe 15 days from now.
Yes, absolutely. I mean, we've already seen that the MSCI index has actually fallen by about 1 to 2% in the last, few days. On the other hand, the S&P 500 has seen a rise because by and large, investors are seeing this as a story of a strengthening US dollar, a strengthening US economy, more and more focus on job creation within the US, and therefore higher returns for dollar-denominated securities and dollar-denominated assets. So therefore, there is a flight of capital, and we saw this in the last quarter of 2024. I mean, the the calendar year 2024, where there was a flight of foreign direct investment away from Indian markets and other Asian markets towards American and US dominated securities. So definitely for the first quarter, we will see investors judging where is the US policy going. And then we'll be able to make a judgment for the rest of the year.
Right, Mithali. Thank you so much for joining us, World Business Watch. Always a pleasure to have you on the show here.
Thank you.